everybody. Thanks for coming today. Jeff Gibby again. I'll be the person reading your legal disclaimer. Let's go ahead and get to that, shall we? Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Danjera, we're going to be approximately an hour, depending on how long it runs. We'll run it as long as we need to. George did warn me he tends to go long when we were talking the other day, so it might be, you guys might get some bonus time today. That's all I'm saying. George and I have been talking, well over probably a year now. We've created some pretty cool stuff inside of MetaStock with TradingAuthority and Trading Empowered, and George has stricken me to be somebody that's very, very bright about the market. He's got a very interesting take on our newest tool, the Forecaster, that I'm interested to see today. And he also, I asked him today what he wants me to tell about him. He wants you to know that he's an avid musician and he plays a lot of tennis. So anyway, without further ado, I'm going to go ahead and get out of the way. George, let's bring you in here.
Good afternoon, traders. How's everyone doing out there? Jeffrey, thanks for the kickoff there. It's great to be here with MetaStock. We've been looking forward to this event for quite some time, and big surprise, got a lot to go through. So I've got a few slides, a little bit of a interactive visual aid here. I've got some MetaStocks that we'll go through live and some Explorer scans that we'll go through live as well. So do you guys want to run or do you want to walk? It's a trick question. We're going to run. All right, so let's jump right into it. The multi-FIB model for MetaStock is what has brought us together. So profitability requires a paradigm shift. This struck me last night as I was putting this together, and I thought that was a pretty nifty phrase that speaks to a lot of conditions that dog traders. Has to do with what we've been through in our past trading and what we put forward as a limitation, whether we're looking at stocks, options, futures. And Kelly, I think a lot of the futures crew are here from maybe some folks that I've pulled in, because obviously I have a lot of futures exposure as well. But profitability requires a paradigm shift, and that really means breaking the mold and starting fresh. As rudimentary as some of those things may be, they're critical. I thought I'd have a little bit of fun today as well, because I want to have a little bit of fun, and I think for these presentations sometimes they can get a bit stuffy, and maybe I'll show you some cool stuff that you never even thought about. So we're really going to go through a lot of stuff today, and I'll just start to work through it and we'll see how far we get. All right, let's get into this presentation here I've got for you is involving our multi-FIB model for MetaStock. Okay, profitability requires a paradigm shift. Got a lot to go through. I thought we'd have a little bit of fun, also look at some serious stuff as well. Got one of these to go through. For the menu of what we're doing today, 4 basic topics and some branches within. Fibonacci and math, so boring it's profitable. MetaStock Explorer, you had me at probability clouds, close to home for me there. Multi-FIB model, the nuts and bolts of market ownership, and then mental health. Who's in charge of you? Those are some things that I want to go over here. So this part I'm going to fly through. If you want to review it, you can play the video back later, but I don't want to spend a lot of time on it, but it's absolutely critical because there's so many traders that don't get math in the markets. They don't understand really what Fibonacci numbers are, the ratios, how they manifest themselves, why they're important, and I find a lot of people making excuses to not look at them, and none of them are relevant. So here's a crash course on some key information that drives a majority of what I do. What are they? Why are they relevant? And how do they factor into the markets? Did I forget when and where? No, because when and where they're always present in every market. Just a matter of whether you can see them or not. And not just whether you can see them, but how you can use them. Obviously, we're using them in our multi-fib model. So let's press on through this. The Fibonacci sequence and the golden ratio. This is the Fib sequence. It's attributed to an Italian mathematician, but it's been around a lot longer. There are some ratios between these numbers if you divide them, going to the left, going to the right. There are some key ratios that come out of that. There are also some other ratios that you can pull from them once you find these. At the end of the day, they're powerful projection tools, okay? That takes us away from where price is now and projects where things could resonate in the future. That's what it's all about. The golden ratio. A lot of people really don't understand what it is. So, unit of length, 1. Division into 0.382 and 0.618 segments. Looks like that. This is the only place that you can divide a unit of 1 to have a self-similar fractal ratio propagate in either direction. So what was the 0.618 added to 1 now becomes 1.618, or the 618 can be viewed as the 382 versus a 618. So here's the unit of 1 with the 618 on top of it here, if you want to think about it as an extension. Okay? Square root of 5 plus 1 divided by 2, it's an irrational number. We typically round it to 1.618. How deep does it go? Well, we can go even further. Root rectangles. Most people don't know what these are, but you hear these numbers of the square root of 2, 3, 4, and 5. This is how they are created. You have a square with the side of the unit 1. You have an arc. You rotate that diagonal line down. That projects to 1.4142 of the unit 1. That is a root rectangle. 2, 3, 4, 5, and so on. That's where these ratios come in. Okay, that's how we get them. These ratios happen everywhere. We care about them because they happen in the market, and we can use them in our tools for handling market action. But just to give you a little mind-blowing insight, obviously I'm a big tennis fan. I'm literally watching Nadal the other day. You can tell I took this off of my iPhone. They threw up some stats on his forehand placement in this match that he had. 62, 38. Do you think he planned this in advance with Uncle Tony to divide up his shots like that for the for this little grid? No, that's the golden ratio showing its hand in human behavior. It's also in physical nature, the relation of the diameter of the Earth to the Moon. The golden ratio is right there. Square root of 618 and a unit of 1 is the radius of the Earth. It's also very, very close to home in the helix of our DNA. Okay, so it's something that is everywhere, really, but we care about it because it can be used in the market. This is where things really fascinate me. Here, looking at a unit of 1 in terms of time and height, going from the low of 74 to the high of 87 for the Dow. AJ, you were asking about the Dow. I bet you never thought about doing this. All of these projections were known in 1987. All of these price points were known in 1987, whether they be time projections or price projections, and they happen to resonate like nobody's business with price action over 20 years later. Okay, literally all the key turning points in the market happened based on the math of that earlier move. Here is a multi-year look at the Dow. And remember that Fib sequence from the beginning where you go 0, 1, 1, 2, 3, 5, 8, etc. Here's 34 years, 13 years, 21 years, 13 years, 3, 8, 5, 1.3, restated 13 as a decimal, 2 at the last that I did updated this. There's a macro scale Fib relevance to yearly impulses in the Dow. There it is, okay? Now, the one knock that people have about technical indicators as well as Fib is they say, well, it happens because everybody knows it, therefore it's a self-fulfilling prophecy. Well, the cold, hard answer is no, it isn't, and no, it doesn't, because these ratios have been effect before we had electricity. Commodities, 1785 to 1865, showing all the key ratios, not anything out of the ordinary at all. Every single move has Fib relevance here. So that's the basis for building belief, is finding actual hard evidence in anything. Here, to this point right now, in these few minutes, you now have a base understanding of key numbers and ratios. You know these ratios are embedded in nature. You know that human behavior operates within the realm of these ratios. You just saw Nadal, you just saw the Dow. Thousands, millions of people versus one person. It's happening, right? Hopefully, you are now thinking why I have not used these concepts more in trading, and that's where I come in. So, meet your new best friends, if then, not if I only. If then is the conditional thought process that will drive us through repeatable visual chart signals. When we are talking about being a technical trader, we have the caveat that we're looking at the same thing ongoing. We're not going to change our chart around because we feel like it, that we have license to do what we want when we feel like doing it. That's the introduction of variability that kills traders, or quote-unquote investors. Repeatable visual chart signals that have a collective of strength that are pulled together into a rule set will then give us entry, stop, target, trails, trend, and re-entry signals. We weigh volatility and risk versus opportunity and expectancy. This all comes from our eye recognizing things on the chart. And the chart that I'm talking about is the multi-fib model for MetaStock. So this is the chart that I've constructed, and I've been using it. I've done a few videos on gold so far, and I've talked a bit about this in a few videos, but this is the model. And integrating this with MetaStock is pretty fascinating, because MetaStock has things going that I don't and haven't really spent a lot of time with. I don't use any fundamentals in my trading at all. My EQ Insider Stock Service that I run was up over 21% for the last half year for 2013. So we beat the market by almost 7%, outperformed it by about 46%, solely driven on chart-driven signals, nothing else, okay? Stop, entry, target, re-entries, rinse, lather, repeat. That's it. Okay. The battle that I have as an educator, because I talk to losing traders all the time, is I'm breaking the programming that you have received, that I've received in my past as well, that have you thinking or assigning a belief to something that's incorrect. So I just went through some hard numbers, literally, for fib, to really quickly break down and build you up, to build you some belief in numbers and ratios. And I showed you a chart that goes back several hundred years where traders trading wheat and oil in the United States in the 1800s, before we had electricity. There's no way a farmer is writing to another farmer, and that's how fibs are propagating in the market. I don't think so. It's inherent to human behavior. So one of the neat things that we can do with the programming of indicators is we can build models, and we can use ratios in a special way that help give us places to look in the future and repeatable ways to respond to price events. That's essentially what we do. So having got that out of the way, let me now take you to another slide here. You'll have to bear with me because I haven't done a presentation with a metaphor bit here. Let me just highlight a couple of terms here. You hear me talk about, if you've been in the live room with me, you've heard me say SOS quite a bit, strength of signal. That's what we use to assign to any repeatable phenomenon on the chart. So it could be pure price movement, it could be price at an indicator, it could be an indicator changing color. When you have that set chart, SOS just says, hey, this thing is happening again, let's assign it some weight. As you find different strength of signal points on a chart, you can build a collective of them and then build a rule set. So a rule set will lead to the rules of engagement, and we always think if-then. Okay, if you take nothing away from today, take that away. If-then. Apply that to whatever you think about the markets, and only based on price. That rectangle off to the right, wherever the active price point is, what are your plans when price does X? If then should drive you through the process. Okay, now there's a few other things that come into play when we think of strength of signal. It's really a filter, because if we choose to trade off a chart and we say, hey, we're going to build up a collective of strength of signal, that's going to build my rule set, we're also limiting what we can do. If we do something as simple as say, I want to be a buyer above a key indicator, like for win example, let's say we want to be a buyer above this yellow line here, that means I can't be short right there, even if the CEO makes off with all the money, whatever the story is, or they miss earnings, or something happens in Russia or China or US, whatever. This says buy. if you're just using that yellow line. It's a filter. It means you can't be looking to go short north of that area unless you create a new rule set. So when we start to build strength of signal, we're also creating a permission path. And the way I like to phrase it is it's how you can behave in the future. What are you allowed to do? 99% of the traders in this room are probably allowing themselves to do whatever they want, whenever they want. That's, you know, the open territory, right? No one's going to tell me what to do. Well, that's how you stay out of trends. That's how you chase the wrong side of the trade. That's how you say if I only, right? If I only. If you follow your rule set, you will never ever say if I only. That's what losing traders and rookie traders say is if I only, because they don't have belief in a process. They can't settle down, whether they're mon-pa investors going off of weekly charts or my rough riders in the futures room where we're looking at 150 tick charts for oil and gold. At the end of the day, the only people that say if I only are people that have not done the belief building and are okay with their rule set. So there's this level of belief, visual evidence, and ownership, personal responsibility that takes you away from that if I only statement. That's why I threw that up as one of the headlines for this presentation, because you know, my main goal was I'm going to talk to all these traders today, and I've got more stuff to show them than they can probably take in. But if they walk away from it, what would be the most beneficial thing? Maybe a lifesaver. And that if I only phrase was one of the ones that popped into my mind. The other is, of course, the other side of it, which is if then around price. So hopefully that is sinking into dry dirt like water into a dry plant. And you're starting to see how that can become a lifesaver. One of the things that I wrestle with is there's a lot of traders that have been shorting the market on the future side because they just think it's gone up too much, but they're not recognizing where all the key commitment levels are, and it's more off of what I would call the false take of fundamentals and fear, emotion. It's fear dressed up as greed, and so they start chasing price, then they take their stops out and they get stopped out, and they don't have a rule set. They're like a balloon let loose in a room. So when we settle down and we say, hey, let's make a rule set, we can look at a lot of colors on this chart and start to pull things together in that way. So below, we've got our RM major and RM minor. I know it was a long way to go for this, but need the right setup, right? You need the right setup. So RM major and minor. The major is blue here, and at some point it will go red. The minor goes white and black, and we can look at the center line crosses as being key, okay? We can even look at the minors popping over the shadow of the major. All of those occurrences give us strength of signal, okay? The yellow big Mo line here is a key momentum line, and it's a line. Price can be above it, price can be below it. How you choose to respond around it is everything. The fib dots are these envelopes around price, and they're some are closer, some are further away. They give us a metric on price action, and they allow us to create areas where we can respond. So we can combine areas and say that I want to be a buyer above the yellow big Mo when I've got my RM minor crossing above the center line. Fantastic buy signal. Wins trading at 135 down here, and it drives up to a new structure high, pulls back, resistance becomes support. It's hanging out just south of the big Mo here. Man, this thing's gone up a lot. Maybe I should short it. I've got black candles too, by the way. These are fib painted as well. The RM major is still present here, so it's a bit more aggressive to go short because the RM major is present. But not too long, this thing closes above the big Mo again, and the RM minors pop above the cloud on top, and off this thing goes. In a worst case scenario, getting out on the green fib here or break below the big Mo, you've just scooped up a whole bunch more profit. But most of the traders are either staying out of that move because they can't imagine it going up anymore. What's the PE of this thing? Who's got money to spend at the casino? What's going on in China and all these vacation areas? Whatever the fundamental story is, the supposition of where price should be is a disaster. Don't go there. Don't try and assign a price value to a story. Think if then around price. That's the name of the game. So in this particular scenario, I just happen to have it up here. This is a great example of where traders just don't take the next setup and signal. Here's another opportunity where candles close above the big Mo. The RM minor pops above the RM major cloud, and yet again, bam, up it goes. And in a worst case scenario, if you got out at a break below the big Mo, you picked up yet another batch of nice gains. That's the beauty of technical trading, is it's if-then. It's a filter, right? It's a filter. If this did not close above the big Mo here, we wouldn't be thinking about going along unless we had a different signal we were looking at. But in a very basic way, this is one of the prime guttural signals that we pull off of this chart, and it's hitting it out of the park here. So this is something that's near and dear to my heart, because the parameters, the underlying code to everything that's happening here is steeped in fib ratios and components thereof. The top level user-defined parameters also are populated with fib ratios as well. So there are a lot of resonant points within this particular chart, and they happen to be pulling in a lot of fib data that just happens to register where the traders are going to respond at some point. So this stock is easy. Give me another one, Rachel. Please. Give me something nasty. Joy Global's been going sideways and chopping up. I already know because I go through so many stocks. I know what it looks like, but let's take a look at Joy. And let's take it a step further now. Let's think about using the meta. Let's think about using the meta forecaster, which is too cool for school. So here's Joy Global. This is a different sector. We just looked at WIN. This is Joy Global. This is in the international geophysical space. Okay, let's just call it that. Strength of signal. Well, what did we start out with the last time? We looked below. We got our bearings below with the RM major. Well, the RM major is red here. So any looks to go long here would be aggressive because of that. Not to say that you couldn't take strength of signal and go long, but if you want to filter your candidates, and that's all these things are, is candidates, then you have an RM major here that's red that would prevent you, in most cases, from going long here. Even at this point here, it's not going blue. Okay? It's not going blue. It's flatlined here. So you don't have that final push from the RM major to start looking at things. Now, as pure price goes, here's support, here's resistance. Here's a break to new relative highs. Here's a test of the prior resistance as support. Here's a lower high. Here's a lower low. Here's a lower high. Here's some chop. So we're going in a sideways channel between about 51 and about 59. Okay, now as a channel trader, you could say, well, I want to be a buyer above 60, I want to be a seller below 50. Pretty simple to do that. For strength of signal, there's an underlying, this really ties in with the forecaster, there's an underlying vision here to price movement saying, hey, things are a lot weaker than you might think. That's really what this RM major is saying. If I wanted to be long this, right now, we closed below the big Mo today. We do have minors closing above here white. So there's strength of signal to the bull side because of that. We could say it's a partial victory for the bulls and that they've equalized the RM major. At least it's a flat line and it's not red. We also have our black fib dots below. That's been populating since late last year, and that gives a little bit of a nod to the bull side as well. As it goes, this last move up was beaten down, and we're making essentially some new relative lows here. So there's not a lot of strength yet to be long. What would change that? What would look better to go long? Well, I like that we've got a black fib dot below here. The master fib trend just flipped bullish back here. But I got a black candle. I would like to see a white candle, a white fib candle, to go in harmony with what the bulls are trying to accomplish here. For further strength of signal, I would like to see the RM major go blue, and I would like to see the top line fib here taken out. There's 1 for the RM major, 2 for the fib candles, 3 for price proximity over the big Mo, 4 for the green fib dot taken out. Those are 4 strengths of signal that are pure price driven. that would then have you long. And then you can revert to your fib dots below to support the position as it moves up, and that defines the risk. So you have a visually driven entry, you have a trigger point that will finalize that, and then you have the risk control of the downside envelope here, and then it's on to the next signal. This thing's going to do what it's going to do. That's what I would do for Joy Global there, Rachel. But let's take this another step further. Here's something that's too cool. This is the MetaStock Forecaster. I don't want to tell you what high school reunion it was a couple years ago, but I reconnected with some of my buddies from way back. And then we had sort of a sub get together with some of our a smaller group of guys and some extremely intelligent people, to put it mildly. My one buddy gets paid to go to a room at Stanford and just write stuff on the wall. They don't care what he writes. They just want him to write something if he feels like writing it. If he doesn't feel like writing anything, guess what? He doesn't write anything, and he goes and rides his bike through the park, whatever he does. He's into math. He's into numbers. In fact, a couple of us were, and we started talking about numbers somehow, and we got on the topic of projections, and obviously I do a lot with FIB for projecting big picture market moves and these types of things. Another guy does computer programming where they do some math-related programming as well. But my one buddy that's the theoretical mathematician, he caught fire like you would not believe it. To see a big guy like that hop out of a chair, you wonder what happened to gravity. And he's up looking at the wall, talking like we can see all these calculations he's writing down. And I literally can't get over how quick he got up and is talking with all this energy. And I don't really hear what he's saying, but all of a sudden he says the word probability clouds. Probability clouds. And I said, wait a second, what is that? And I didn't know. I heard of the word probability or clouds because of cloud computing, but the word probability threw me off and really stopped me dead in my tracks. And he went on to say that that's basically what he does, is the calculations he comes up with take different avenues and project forward and then combine into a probability. That's what these things are with the Meta Forecaster. This is one of the coolest things I've ever seen on a chart that's not really indicator based. This is drawing on all sorts of information and projecting forward in this heat map the percentage likelihood of where price would be in the future. Could this be any more up my alley? No. So I can go and say, well, I want to look 90 days out here. Give me 90 days. These are recognized events that I have chosen to use here because they speak to the long side, and most of the work that I do is for buy side setups and stocks. And so with the high probability zones here north of 90, and then you got 80s, and basically anything north of blue is 50, and when you go hot pink upwards, you're talking better than 60%. So within the next 30 days, there's a 10% chance that we could be trading lower, and there's a 10% chance that we could be trading higher. But within that realm, the higher probability colors are pointing upwards. Okay. Here's where you can take a screen, a candidate, and that's all you should ever think about. Anything that you look at is it's just another candidate. It doesn't have any more weight than anything else. I'm speaking primarily to you gold traders out there, but it has no more weight than anything. It's just a candidate. So when I go to this forecaster here and I see the information it gives me, at worst it really says we're going sideways, but in the very near future this thing's got a little bit of upside projection. That's pretty cool. So I want to go look at my fib chart now. Who was trying to stump me there? STC, you're trying to stump me with Joy Global, and that's great. That's exactly what you want to do, is you want to look at a storybook kind of chart like Win, but you also want to look at something like this that's a little bit more challenged. So there's kind of a middle of the road view of this chart here based on what I've told you so far of strength of signal, and there's a little bit of a nod for the very near term that this thing will pop up. So a couple of things that I would watch would be breaks below for immediate signs of weakness. You see a break below the red fib or the blue fib here, the chances are we're going to be going down and hitting that 10% lower target that we just saw on the forecaster. But if we pop up just a little bit more here, there's a good chance we're heading up about 10%. So that puts me on alert to say, hey, I want to be more aggressive to the long side here. The near-term forecaster was giving me an upside projection. That's neat. I want to be long joy, but I want to respect price. This is the governor right here, and it's showing a little bit of weakness relative to the big Mo. So while I initially was looking for a break of the green fibs, with that extra information, I could look for a more aggressive entry that might just have another RM minor bar closing white and one bullish white candle above the big Mo, and I'm good to go. That's how I would handle Joy Global there, but really integrating it to the forecaster. The forecaster there, Tom, there are events that happen. They are probability cloud based events that are then carried forward. So there's an underlying flow of calculations that you'll never see. I know that that's happening because my buddy told me all about probability clouds that one day and kind of blew my mind. I never thought I would see it on a retail scale. So if you guys are MetaStock clients already and you're not using the forecaster, get on it. This thing is unbelievable. Here's a nasty chart. Somebody's trying to break the system down with maybe not such a pretty looking candidate, and that's great. Let's take a look at another one. Seems like that's what you guys want to do. Let's do a little bit more of that. McDonald's, okay, let's take a look at McDonald's. So here's McDonald's. Here's the RM minor going black several times. Here's the major starting to taper off and hit the zero line right about here, and now we're getting RM majors poking into the red, okay? We've had a couple of bounces off of the big Mo here, and these are tradable. The way I like to trade these is I like to see a candle close above the big Mo, and I like to see 2 bars on the RM minor. But the top line fib in this case needs to be respected, and the green is the one to look at, and you can see it's resonating very well with the traders. We get over here, RM minor, bam. We hit, look at what happened with price. Talk about resonating with the traders. Look where we stopped. This was already populating here. Price moved up and then bam, sent it right back down. So it's not that you couldn't be long there. It's just a little bit more aggressive because of the underlying RM minor here. But when you cross above the big Mo, look for a trip up to the green fib dots. Here again, essentially that's the zone that sent it back down. Here, it rolled over sooner, and that break below the big Mo showing you that weakness. And then over here, we finally cross above again. Look what happens when we hit the green fib dots. Big sell-off. Okay, so here we are today. Let's say we're flat McDonald's. What do? Well, it's a little bit conflicted. We've got RM major a little bit red. We definitely have some nice closes above here with the RM minor. We clearly have price above the big Mo, but we don't have the fib dots flipped to the bullish trend yet. The black is on top. We have a great power candle that pushes up here, dominant, moving in favor, but we've pulled back and really sort of rejected that rally altogether. So if I wanted to be long this, what about getting a little push from my friend the forecaster? I'm going 90 days out. The same event-based carryover there, who was it, Tom? And taking over with these recognized events that I'm using for this scan here. Here's another one within the next 25 days or so, 60% probability or better that price is going to remain at least flat, but maybe even moving up into the 10% category. So that's got a pretty good nod to price at least remaining flat, if not popping up a little bit. So then I'm faced with the same question. If I want to be long, I've seen some positive information on the forecaster. Probability clouds say go for it, but pure numbers say hang on a second. Let's take a look at this. We've just broken to new highs. We've pulled back pretty hard here. The candles have gone black. Okay, we're still in a downtrend, and we still have RM major here as red. That's cautionary. So a couple of things that I could look for with price dancing above the big Mo here. How about a white candle? Can you please give me a white candle so I can get long? Give me a white candle above the big Mo. I'd like to see that. I'd also like to see an RM minor bar close, and I'd also like to see it close higher than the last bar here. For further strength, where the blue fibs come in, that price point there essentially at 97 would be a great trigger to look for. So you can take three things off of the chart. We don't have this one here yet, the white candles, not happening yet, and we don't have that bar yet that's higher than this one here. And we sure don't have price moving up over the blue fib dot. That actually was a reverse of what happened today. But I know about this for tomorrow. I could even put a resting buy order there, and if price starts to rally up in the morning and crosses that, I'll get long and revert to my fibs for my stop. Simple as that. Simple as that. If then around price, if then around the fib dots, if then around the fib candles and the RM major and RM minor. Where a lot of traders will have difficulty is they'll beat a stock to death. They'll fall in love with a stock. The most significant damage that I've seen, and I've been hammering on this for quite some time, is the traders that are fundamentally long gold and heavily weighted in gold stocks. And you know, I've done plenty of videos to show and tell you why you don't want to do that. We're in a bullish market, right? The kinds of setups that you want to find are stocks that are in bullish trends and ones that are in bullish trends that are pulling back and resuming up, as opposed to the pure bottom feed candidate. And that's sort of the opposite of what most traders do. Most traders think they're getting a quote-unquote better deal by fishing at the bottom of the barrel, trying to buy, you know, whatever it is, Yamana Gold on every new low that it makes for the last 2 years, rather than buying Disney on a breakout to new highs, or whatever it is, breaking out to a new high, or something that's gone up nicely, pulled back, and then resumed back over the big Mo. Great strength of signal to find something like that. So the type of candidates that you're looking for should be weighted towards bullish altogether. The strength of signal we can pull off of this chart gives you that final step of math to the equation that we really don't get that from the forecaster, but that's okay. It does its job by just saying, hey, we got a probability that we're going to be up here in the next 20 days. If you want to trade this stock in the next 20 days, what side would you want to weight towards? You'd want to weight to the long side. But it's had a down day today. It's pulled back quite a bit, and it's actually undone this huge rally that it had the other day. So as this chart goes, it's undone the energy from a couple days ago, and it's sort of pressed to relative lows here for the last several months. Strength of signal, you know about it today. You can watch this tomorrow. Basically, 97 is the threshold. Watch for that to pass, and we're very likely going to retest the highs here, and then up we go. So if it happens to break down, that would also visually be evident by price remaining with black candles and closing below the big Mo, and maybe even the RM minor then moving into the black. And you're going to see price at some point with a scenario like this move lower, and you'll see traders try and make a case or find a reason to go long rather than going if-then around price. They're going to try and find a story like, oh, they're going to get rid of some business unit that's not making money, or what have you, rather than if-then around price. So there's just some real-world examples right there. Some of them are setups that need to develop. Some of them have already happened, like the killer one in Win. This also goes to picking the right candidates. This stock is not exhibiting strength, and it has not been exhibiting strength for multiple months. Okay, it's been really challenged versus Win, which has been exhibiting nice momentum. That's the kind of stock that you want to look to participate in. And I brought you all the way back to when it broke out, right? That was too much for some people. I can't touch that with a 10-foot pole. I'll short it, and then bam, up it goes, and they're not part of the momentum. And you got price over a big mo, you got the RM minor going in gear, and yet people aren't going long, at least not enough of them, right? That could be, that now know about this. So there's just a couple real world examples. I've got a lot more to go through though, so let's do this. So this is actually the manual. I was going to run through some of this, but I just thought I'd run through some live examples and just throw everyone into the pool. But I will show you a couple of these breakdowns here, just so you get the strength of signal down, since we have a little time to spend here, and then we'll look at some more examples. Here's an example of price crossing the big mo. You've got a candle that closes above the big mo. There's strength of signal in that. That's the candle closing over the yellow line. When you see that and you defend the green and you look to exit on the blue, that is a systemic way to handle price. That is purely systems based. If then. Did you get a candle close above the big mo? Yes or no? Long next bar market. Where does your stop go? It goes one tick below the green fib dots. Where do you exit? One tick below the blue fib dot. And that means on any momentum run, at some point it'll start to roll over or go sideways, and that blue fib dot will be taken out, and that's where you get your profit. Now, as soon as I show this to somebody, they say, well, why didn't you get out on a break below the big mo? Well, that's absolutely something that you could do. What's the difference? The difference is that the blue fib dot requires price to fade more, okay? This is where we start getting into volatility. The break below the yellow big mo here, that's one that is staying much closer to price, and with not as much volatility, you could see price dip below it and then just continue on up. So there's a filter. There's that word again. There's a filter to this process. Whether you're using this model or one that you create your own or one that you bought from wherever, if you're following rules, if you're following something that's on a chart, you're creating a filter matrix, a lattice of permission slips for your behavior in the future. That's the best way to think about it. But this is a great signal to look for here. Candles closing above the big mo, defend the green, exit on the blue. So easy to see that. How many hours do you have to listen to the news and sift through disaster this and woe is me that, and taxes this and oil this and jobs that and GDP this and on and on and on, right? The big mo is the yellow line, the big momentum line there. Here's the same thing in reverse with a gap down, shorting next bar market, defending green, exiting on blue. Pretty cool trade there. Both of those trade directions are in harmony with the black fib dots. Those are the master trend fib dots, are the black ones that are around price. So here, as another metric to McDonald's, we've got the black fib dots at top. So that's a little underlying nod to the bear side. We had the same thing with Joy until over here. So here, in fact, you could almost think of this like McDonald's, where, you know, here's McDonald's. That's basic. Whoops. I don't think you want to have a hamburger made out of dirt, but here's McDonald's, where you've got a downtrend. The fibs are on top. It had a bounce off of the big mo here. It just couldn't get it done. It rolled back over, still with the bearish RM major here, but the minors started getting a little bullish down here, and eventually it popped above. And there's the breakout, so to speak, and then here are the black fibs rotating to the bull side. We don't have that. But that's something to watch. So in those signals that I showed, they're in harmony with that fib rotation there. Here's another really cool signal. And I don't know if your eyes are starting to track this yet, but the structure of pure price, you can see that it does a lot of stuff at these fib levels. They're not like moving averages because they aren't. There are fib dots. And you can see that you know that the dots are happening in the future and price is doing something around those areas. I call that resonance. When I do my big picture forecast and I say we're going to 1890 in the S&P, a likely resonant zone, and we get a couple points from there and then we have a big sell-off, that's the resonance that I'm talking about. It happens in all markets in all time frames. It's fascinating, even to me, as much work as I do in this area, to see it happening on a chart like this, because this is not the way most people think about fibs. The traditional way is you have a retrace and an extension, and you use the drawing tools, and that's it. And I do a lot of that, but this goes many steps further and is still showing relevance in terms of where traders do stuff. So that's something that I take a big note of. This is a different kind of signal here. This is buying green on a break lower while in harmony with that black fib trend, and then selling blue, and it's buying something below the big Mo. Okay, here is another pullback, buying that touch of green and then selling blue on a bounce up. You can't see the cursor, but that's what that's all about there. That actually was for a Regeneron, one of the top biotech stocks, and those two rallies there were 13 and 17 bucks respectively, happened over 7 months. Two of the exact same signals, $30 in open position profit over 7 months. I'm sorry, over 10 weeks, but over a period of 7 months, the price action was basically nil. So there's a coiling of the traders getting ready for one of these moves, and that's just a great example of it. Also, keeping you out of the chop by not, taking every little blip as being the next big move. If then around strength of signal, okay, has huge benefits. Here's a really cool one. Here's where we gap down, we do an outside return, and we reject the big Mo as we hit green. So we sell green and we buy blue to cover, and that was a great one. Is that ORLY? Yeah, this was $11.50 for O'Reilly Auto Parts. 12% move. It happened in 2 weeks. The next 3 months saw price do virtually nothing in a tight sideways range. That's another neat thing about these signals, is they coil. They're crowd psychology dependent. That's all that price is. It's a blueprint of crowd psychology. The neat thing about using so many fib ratios and numbers is you're more in tune with the crowd psychology. So when these setups happen and they pop, well, they just took all this time to develop. When they finalize, then often the crowd sort of settles down until they recharge. Yeah, I can only move the cursor so much here on this. So I just wanted to show you a couple of these signals here because I like them. Now what I've done is I've taken some of the same signals and I'm showing you where RM major and RM minor can help filter signals. So here is a sell the yellow signal in the middle of the chart, okay, right to the right of my cursor. The RM major is bullish, and it takes a while for the RM minor to go bearish, but we never got the RM major to go bearish. So if you're requiring that as a filter, you would not have taken that short. It actually moved in favor a bit. And then here is a buy above the yellow line, okay, above the big Mo, and then a continuation. And there you see the RM minor going bullish, and that's a great thing to see where you have the predominant trend, the major, getting that micro boost from the minor candles going across the center line, and there's a huge momentum surge right where that happens. That's a coil point. Okay, that's exactly what I'm talking about. There's a coil point right there. So Tom's asking, how do you know what to do, basically. Well, one of the things that you need to do is you need to look at more signals. And what I tell the traders in my live room when they ask a question similar to what you did there, Tom, is I'll say, well, what are you going to do? Because ultimately you need to create your own rule set. There are a handful of core setups and signals that I've got in this manual, and that's it. So it gets to which ones are you going to follow. How would you know? Well, I could tell you which ones to follow. How about that? Or how about I show you which ones I like, because they're in the manual to start out with, and you scroll through price and manually build some more belief. When you do that, that's when you really get the follow through to follow and do what the chart's telling you to do. So when we talk about these visual signals, we're talking about a model, right? One of the questions I like to throw out is, what does the model need you to do? What does the rule set need you to do? That puts the focus and emphasis on the fact that we do have something repeatable that we're basing our behavior on, but that's it. So what does it need you to do? You're subservient to the model. What does the model need you to do? So yeah, the RM minor is definitely something that you would want to look at. But let's also not forget what we just looked at. That forecaster is a great tool to use in harmony with the model. For those of you that are able to pull this thing up, you got to be using it. This is so awesome. I can't even get over it. If I was going to be very negative in a scientific way, here's how I would break down the forecaster as not being that important. I'd say, well, it is what it is. It's a cloud, and that's not that defined. Look at these nebulous zones here. It's almost like a cloud. Well, yeah, it's a cloud. They're probability clouds. So the knock would be is that you don't have an actual hard cross point to any one of these areas here. They're a bit nebulous. You have some generalizations of the ratios of the percentage likelihood of where price would be and how far out that would be. But there's a little bit of wiggle room to that. And we don't like wiggle room, but we like what this is telling us in a big way. So this, combined with the if-then of pure price, then you got something. Then you've got something. So that's where, if you just went off of this, you wouldn't know where to get in. Where's your entry? Where does your stop go? Where are you taking profit? How do you know if the trend is weakening? What if you take something off and you want to get back in? How do you know that the trend is still present? How do you gauge the strength of it resuming? How do you do that repeatably so that you're not interacting in a variable fashion with the market? What do you think 90% of the traders are doing? They're interacting with the market in a variable fashion. I'll listen to the conference call. If it sounds good, I'll buy some more. Or that earnings report really stinks. I'm not going to buy any more. Or looks like they're going to taper off on bond purchases. I'm not going to buy anything. Or Putin seems to like to put the gas pedal on the tanks lately. Maybe I won't buy anything. Right? Or here's a new indicator. I've never seen it before. I'm going to start using this. Really? Okay. So any one of those events that would drive your behavior, your interaction with the market's going to change. It just is. There's no repeatability to it. There's no if-then behind it based on price. This is something that gives you a nod to flat to the upside within the next 3 weeks, and a pretty nice likelihood of that. What it doesn't give you is that hard number-based information that we need to have, that you need to have, and that's where this comes in. So, Tom, one of the things that I would tell you is that it's all about candidates and where you come into the flow of the signal. Are you flat? Are you long? Are you short? Do you have a position yet? Yes or no? So how are you coming up with a candidate? Do you have a watch list? I encourage everyone to build watch lists so that you have a few key things to look at when you have time to do your homework. You can also use that forecaster to then take them to the next level, sort of like tending to your garden. And then the last look is on the multi-FIB model. You buy above yellow, you take something off at one of the fibs, you look for the trend to resume, you respect those RM majors and minors, and it's rinse, lather, repeat. You don't care what happens to the trade once you put it on. You just want to make sure you you nail those things when they fire off. And that's really where there's so much lost opportunity. From the futures side, Kelly's talking about there's a lot of futures traders here today, and I think they're following me because, well, I do a lot of futures work as well. One of the things that I have to deal with a lot of futures traders is they, what happens with a lot of traders is you get into stocks and then you get into futures and then you stop looking at stocks and you get overly bearish for no good reason. You just tend to be bearish all the time. A majority of futures traders are that way. The next thing you know, you've brainwashed into keeping yourself out of the greatest bull market we've ever had and patting yourself on the back for doing so, like you did something incredible. I don't like to hold overnight. Really, I wouldn't spread that around. We just got through a 5-year bull run and you weren't long. Not a good sign there. So the ability to have a well-rounded approach to price action is very attractive, where you can position trade some futures, position trade some stocks, some options as well, and maybe even do a little day trading. Then you've got a well-rounded approach. You think if then around price, and you're not thinking about, I don't want to hold overnight. You're thinking about, well, the trend is up, I want to be a buyer. I want to be a buyer until the trend changes. So I'm starting to pull in a lot of psychology in case you didn't notice, because this is what goes through traders' minds. It's gone through my mind, it's gone through your mind. There's nobody that's immune from it. The only person that can say they're immune from it is somebody that just woke up today and realized that there's a market. What's that all about? Okay, they get a hall pass. They get a hall pass. But anybody that seasons themselves in the market is going to start to go through these processes where you season the wrong repetitions. What the multi-fib model does is it gives us a pathway to have repeatable positive reps. Repeatable positive reps.
Hey, George, I think we lost audio on you. Can you come in and just click on the speaker button?
How's the sound there?
Oh, it's a lot more audible than it was just a second ago.
Something I've got.
Well, I'm interjecting. Malinga asks, is this going to be recorded? So the answer is yes. We're recording it right now, and we'll have it uploaded on YouTube within a couple of days. If you registered for tonight's event, I'll send you an archive when it's available.
These are some pretty typical. Shall I continue there, Jeffrey?
Yeah, it's all you, dude. Sorry, George.
Okay. No worries. Mauro, these are all typical trade setups. These are screenshots from, nothing fancy about these candidates. They're all big names. Here's a couple scenarios. Here's a heat map for Stanley, okay, SWK. 30-day probability, sideways move, 2% gain likely, potential for 6% move up or down. So we got the center and the extremity. That's good to know. Here's the chart. Okay. Here is price that is just above the big Mo. We like that if we want to be long, right? But look at the RM minor. We've got blue that's sort of tapered off, and the RM minors are black. So further strength of signal from RM minors going white would be something to look for to go long. I like using that green top line fib as further confirmation, and sometimes I'll even go twos because I might get an advanced signal from the RM minor, and then I'll see something over the over the green fib dots that'll get me in with a second position. But strength of signal is what I want to see based on what I just saw on the heat map there. So it really gets to, what's the candidate that you're looking at. Not every stock has the same setup. Here, I need to see the RM minor go bullish. Okay, I'm not going to get long this with the RM minor below the center line. That's just it, STC. These do not reflect fib levels as you think of them. Okay, if you have a bullish impulse that goes up like a linear move up, and you have a retrace, for example, from this swing low to this swing high here, if I retrace that, this is going to come in around the 44.72 retrace, right about there. That's not what these dots are doing. They're not that one-dimensional. There's something much deeper at hand here that is projecting price action based on prior price action. So they're not fib levels as you would think of them traditionally. Traditionally, you would look at an impulse and you would either retrace that impulse or you would extend. That's very one-dimensional. It's very powerful, but that's not what we're doing here. The fib dots have a lot more going on to them than just a retrace or an extension. So they are very in harmony with what the cloud is doing, except these are projecting actual price points. So Mara wanted to look at some real-world examples. I've got real-world examples in the manual. That's how we build things up. Here's one here for Apple. This heat map says basically a 2.5% move in the next 1 to 3 weeks, 6% upside, 5% downside. So basically a relatively stable forecast here. Here's what the Apple chart looked like when I did it. We had price breaking below the big Mo, okay? We're trading at 532 there. Let's go see what happened. Why not? $532, we were right about here. I'm sorry, no, we were right, how did I do that? Hang on. Yeah. We were down here, okay? We were down here, and we basically went sideways, then gapped lower, and then here's a bounce off of the black fib dots here, and then an outside return. We've actually been below the Big Mo the entire time. So if I wanted the strength of signal, as I showed earlier, like what we had over here, we're starting to get some crosses above here on the RM minor, and all the way back here the RM major flipped blue, but we're going sideways. So as it is, price has gotten as low as about 490, it got as high as about 580, but the bigger picture projection, obviously, you know, you could do something more abrupt than this, which is something I showed you a little earlier, but we don't have candles above the Big Mo. And I don't have any any white RM minors to go along with, but we're getting pretty darn close. We're at 531 here. We close up just a couple more candles here. By 540 as a price point, we should probably see a long signal coming with some white RM minor. And that's what I would look for at that point, to have that Big Mo close with RM minor in harmony with the RM major. The cloud gave me the flat forecast. The model gave me further weakness that would have had me from going long here, and it actually saved a big trip down here. Aggressively, there's a long signal here because candles went to white with a counter trend arrow, and we had a higher low on the extremity of the RM minor, but that's an advanced signal right there. And note the hit on the green fib, and note the send back. So I showed you a couple of those before, but here, talking about Apple based on the scan, which was done, you know, obviously several weeks ago when I put this together, That's what happened afterwards, and it was weak when we looked at it here, and there's the follow-through, and now it's just basically going sideways with not enough strength to give us the traditional long signal. So those are some real-world examples right there. Where are you in the flow of the particular stock that you're looking at? The way I go about looking for stocks is I've got a couple of watch lists, to put it mildly, and I look for price action within those watch lists. So I'll find something that catches my eye, and then I'll screen it. So just because I have something on a watch list doesn't mean I'm going to buy it. I need to see something. I need to see my strength of signal percolating that will have me follow through and get into a position. Ultimately, that's the driver for everything. And once I get in, I don't care what happens. I'm going to look for the next signal and the next one and the next one. Relentless pursuit. So I won't necessarily continue to trade a stock if it starts to break down. If it has a big sell-off or something, I'm not married to the stock. I don't see that move down as a chance to get it cheaper or something like that. I look for the setup that's purely chart driven. And now with the forecaster, with the latest release of Meta, I've got a 1-2 punch that I never thought would even be possible. So perhaps with that, if there's any last minute questions, why don't you let me know what they are now? I think we're over time already, and I could probably go on until the sun goes down here. I think by attending the session today, you'll get some more information on the multi-fib model and some other things that I do. So if there's a sign-up spot for that, make sure you sign up for it. The regular old S&P, I'm not even, I don't really look at that on this particular chart, but I don't look at tick charts for the big picture stuff there, Will. I do for day trading. For oil and gold, the NASDAQ, the S&P E-mini, I run tick charts in my live room. I also look at volume charts. Justin, basically what I was showing here would go into the swing trade camp for a lot of people. You know, the way I think about it, I don't want to label myself, if I got a stock today and I got stopped out because of volatility, that's the way it goes. If I got a stock today and maybe those green fib dots kept me in for 7 months, that's the way it goes. I'm not planning to be in a stock for that long. I think by now everybody realizes how ridiculous the phrase buy and hold is. So it's not up to me. It's up to the market. It's up to the price action to dictate how long the trade will go. So I would prefer to have as few trades as possible and stay in the positions as long as possible. But at the same time, I've had some quick gains on some sharp price action that has really done some heavy lifting. So I was showing traders in the live room how to day trade TNA, the ETF, 3 times leveraged ETF. And that's one where intraday, maybe I'll take this opportunity to drill down. I've been looking at daily charts this whole time, but the strength of signal and the way it looks on the chart is all the same when you drill it down to a smaller period value. So for example, here you could look for a buy signal, candles over the big Mo and exiting on the blue fib. Same thing that I showed you in the manual. Here's a break below that if you wanted to take an aggressive short, as soon as you get some black candles, off you go. And that moved down pretty well. This is a really neat ETF to day trade. I usually look for 1 or 2 setups on this for some of the accounts that I manage and get a couple quick pops here and there. For options, I'll tell you a couple things, Bob. I don't do options the way you understand options. Bigger picture, I'm about targets. My strength is figuring out where the market's going and where it's likely to go. One of the things that you can pull out of this model here is that when you have a coil point, okay, when you have a mathematically combined area where you have one of our signals, like the RM minor going over the center line and closes above the big Mo, there's strength of signal to the long side. One analogous trade would be to have an in-the-money call at that point. Another option would be to look for out-of-the-money calls when you get those signals. Most of the options that I trade are out of the money. I rarely do in-the-money setups. The kind of options that I like to find are ones where price is getting ready to go on a new impulse, and I'm thinking further down the road. I'm thinking of a much bigger move than most people are thinking, and I'll get an out-of-the-money call option. I did that with the GLD just recently, and as soon as we hit 1390, which was the key upside target, gold fell apart. Went down $50. But that was a huge percentage boost trade, and at the time nobody was thinking about out of the money calls for the GLD at 160 because we weren't trading anywhere there, and they were trading for just a few cents. But boy, go find a better bargain. Let me know if you find one. Huge multiple expansion on that guy. But as it hits a key target, then it erodes quickly. So it's a different style of option trading that a lot of people do. I don't want to be heavyweight options. I'd rather be heavyweight stocks and dividend stocks and complement with a few out-of-the-money options. That would change if we go into a bear market, obviously. Actually, Fred's asking, do I base the volatility around the forecast cloud? And actually, I don't. The volatility is really, what's the right word? I guess it's managed with these fib dots. So the issue with volatility is that it increases risk if you allow it to, right? Where most traders will have an issue is something will happen, they'll get stopped out, and they'll say, man, I was long, I got stopped out, I'm going to buy this thing back, but this time no stops. And then that last volatility was just the tip of the iceberg. Here comes the real volatility, and then bam, the thing goes down 15% and you don't have stops. So volatility is simply the oscillation of price. The trend is the greater directional movement of price on any particular time frame. The risk control is how far you'll allow price to move against you. You could have a perfectly valid setup and get into a position and have your risk control violated and book a small loss or a medium loss, whatever it works out to be in your view. But the master trend continues on. Where a lot of traders will lose it is they won't have a way to gauge that the trend is continuing. How do you know? What strength of signal would you follow? What if you got long here and you got stopped out on the red fibs? Well, here's a close back above the center line by the RM minor. Here's a close back above the big Mo almost 3-4 candles later, and it moves in favor. If you're reverting to the green fibs, they keep you in the mix a lot longer. So you'll see that the moves that go sideways or lower inclines, I should say, the green fibs will keep you in the trade longer. But when things are going up steeper, you want to revert to the more narrow band fibs like the red ones, because as things go up steep or down steep, they reflex going the opposite direction. So those are a few things that I look at. John, I don't know where you sign up, but somehow you're going to get some information. So I would imagine Jeffrey's going to hit you guys up with some kind of a form to fill out, or yeah, I'm not here to sell you anything today, Oliver. You'll get some more information. I just wanted to share some of these visual concepts with you. Remember, regardless of what you guys do going forward, think about the chart that you're using to trade from. Think about the strength of signal that you see on that chart. Think about if then around price. If you're a MetaStock client already, that forecaster is an awesome tool to use, and if you're not, I don't know what would keep you from being a MetaStock client right now. This model is going to be available, and some other services as well. So yeah, Kelly just put up some information there. So you should definitely check out the MetaStock platform. The price of admission is worth it just for that forecaster. Probability clouds is what it's all about. That's why you had me at probability clouds. It's a little joke there, but literally, I was had at probability clouds as soon as I figured that out. And I was talking with Jeffrey a while back, and he said, well, we got the new version of Meta coming out. And I said, okay, let's check it out. So we were Skyping, going through stuff, and he says, I got to show you this thing. And this light bulb's going off left and right. It's such a great component to candidate analysis. So think about that 1-2 punch. You've got this amazing technology to forecast into the future probability. Maybe those words just sound too calm and too tame. You've got the ability to forecast probability in the future. That's unbelievable. What you don't have is the risk control, the defined entry stop target. You combine that with the multi-FIB model for MetaStock, and you're literally in business. That's a trade business right there. So I think we better leave it here today, folks. We covered a lot. This is literally the tip of the iceberg. There's a lot more to go through, and in coming days, I'm sure our paths will collide, and I look forward to that, where we can advance things further. So thank you for your time and investing the time in yourself. I appreciate all the questions. I like to see that kind of feedback, and on the second response there, it's a sign of a good group, and that makes me happy. So everybody have a great rest of the afternoon. Thanks to MetaStock, Kelly and Jeffrey for everything. This has been a great experience for me, and I look forward to seeing you all again here at the next seminar.